Hello and good morning, everybody. Welcome to the fourth webinar from Golden Pike. I'm Abhijit, and today we will be discussing on a very important and very useful topic, especially for first-time debt market investors, and that is what are NCD IPOs and how to invest in them effectively. Now, during this webinar, we will have a couple of polls to understand the audience reaction. uh, Whatever questions you have during the flow of this discussion, please write them down in the Q&A box in your Zoom webinar panel. At the end of the session, I will take up the questions and try and answer them to the best of my abilities. I hope that by the end of our discussion, I would have been able to share some valuable information with you, which will help you in taking your first step towards a successful investment for fixed returns. So let's get started for the day. We'll start off with the first poll, and here it is. Here's a question. Have you heard of NCD IPO before? Your time starts now, and time's up. I'll close the poll, and the results are around 50% of us are not aware of what NCD IPOs are, which is great. So, we can discuss effectively and, understand what this is. And the remaining 50% are aware of what NCD IPOs are, which is great. With this, let's take up the first point to discuss for the day, and that is what is an NCD IPO? Corporates raise money from the market in the form of debt to fund their business operations. Now, during this process, they actually open up invitation to various categories of investors, like retail investors, institutions, and high net worth individuals, wherein they invite these various investor categories to lend money to them at a certain rate of interest, which they promise to pay to the lenders. In exchange of this, corporates issue securities, which are called as non-convertible debentures, to the investors. And in lieu of this, the corporates, once they have raised the money, they would pay interest regularly every year till the non-convertible debentures mature, and post which they return back the funds to the lenders. This whole process of corporates and other institutions raising debt money from the market, from across multiple investor categories, right, and issuing fresh debentures to these lenders. This whole process is termed as NCD IPO. Simply put, NCD stands for non-convertible debentures and IPO stands for initial public offering, because these are fresh issuance of debentures that are being done by a corporate to raise money in the form of debt. Important point over here is that retail investors can participate in these NCD IPOs with as low as 10,000 and to a maximum limit of 10 lakh. And the applications can be done using UPI through completely online process. Now, one question that certainly comes to the mind is, why are they called non-convertible debentures? The reason behind this is that these debentures will cease to exist once they reach maturity and the corporate has paid back or returned the money to the lenders, which are the investors. There are another kind of debentures which gets converted to equity of a company in some future date based upon the share price of the company at that point. But those are not the ones which we are discussing here. Here, it's pure debt instruments which are issued by corporates in lieu of the funds that they take from the investors. And once the debentures reach their maturity, they cease to exist anymore. They do not convert to the equity of the company. So now we have got some idea about what an NCD IPO is. Next, the question is, so why would a corporate raise money via NCD IPO? The first and the most popular reason is to fund their business growth and expand their existing lines of business. Apart from that, we also use these funds for general corporate purposes. And thirdly, they may also use these funds to pay off certain debt which is already there and on which they are paying higher rate of interest. So let's say there's a corporate which has let's assume 100 crores, which it has borrowed at 11% from the market. Now, the interest rate in the economy comes down, and now the corporate is once again able to raise debt from the market at 9%. Then it can use these funds, these fresh funds, to pay off the 11%, right? And so its cost of debt comes down to 9%, which makes business sense for the company. Now, let's quickly look at some examples of how do NCD IPOs look like. So I'll show you a few examples from the past. This is a company which has, raised debt from the market through the NCD IPO route. And here's one such example. Let's say, it did an issuance of debt some time back. The coupon rate was 10.15%. It was rated, the debentures were rated CRISIL A minus. These debentures are essentially listed on the exchange, both BSE and NSE, and they were senior secured in nature. I'm giving an example over here. Right? The examples are like India Bulls Housing Finance, coupon rate is 9.75%, rated CRISIL AA, listed and unsecured. And there's this third example of IIFL, which has issued NCDs through the IPO route, and they were paying 9.6%. The CRISIL AA rating was assigned to those debentures. It was listed and it was unsecured and subordinate. Now I know there would be a lot of questions in the mind of our audience over here regarding various terms. I'll pick up top 3 terms over here. First is rated. It means that each of these NCDs have to be rated by some credit rating agency, which shows what is the level of safety or the level of risk which is there in the bonds. And AAA rated bonds or AAA rated NCDs typically will be paying lower than AA, and AA rated bonds will be paying lower than A rated bonds. So that's like the hierarchy of the ratings. Listed. This is a very important criteria for NCDs. It means that these are listed on the exchange, and there are 2 benefits to this for investors. First one, if I as an investor, I have invested in these NCDs and I want to sell off them in between, I can always put up my NCDs on the exchange for sale. That's number 1. Number 2 is, because they're listed on the exchange offers or provides a kind of investor protection mechanism to the investors of these NCDs that are listed. So these are the 2 benefits of investing in listed NCDs over and above those of or beyond unlisted NCDs, which do not have these 2 advantages. And then let's look at the final 2 terms, senior secured. Now, these are 2 features built into NCDs. We have discussed these terms in the previous webinars, but for the benefit of a lot of audience who would have participated in it the first time, let me explain these 2 features. Secured or unsecured is a feature which means that if a bond is of nature or an NCD, I'll be interchangeably using the term of bond and NCD over here. If an NCD is secured, it means that it is backed by some collateral of the company, which can be assets or future cash flows. In worst case scenario, if the company winds up, then this collateral can be used exclusively to pay off the secured NCD holders. Unsecured NCD essentially will not have any such backing or collateralization. Then let's look at the second term, which is senior versus subordinate. So this also is a term or a feature in the NCD which gets triggered in the worst case scenario company is winding down. The senior bondholders or the senior NCD holders are paid first and then followed by subordinate NCD holders. So these are a couple of examples and the terminologies around NCDs that we should be aware of. Now, let's say the corporate is raising 100 crores of capital through an NCD IPO. It is not necessary that it is going to raise an entire 100 crores from one category of investors. Actually, there are certain percentages which are allocated for different investor categories in an NCD IPO. And how does it look like? There are top 4 investor categories which are generally allowed to participate in these NCD IPOs. First is retail, then is HNI or high net worth individuals, then non-institutions, and then finally institutions. Now let's try and understand who all would fall into each of these investor categories, or how are these investor categories defined. Retail investors are individual investors who can invest as low as 10,000 and then multiples of thousands thereafter up to a maximum amount of 10 lakh. Anybody who is investing beyond 10 lakh will be deemed as an HNI investor or a non-institutional investor or institutional investor. Non-institutional investors are essentially the corporates who can apply for this IPOs, and institutional investors would be the likes of provident funds, public sector units, public sector banks, LIC, these entities which are quasi-government, or they have got government holdings. And the typical distribution of the money being raised through the NCD IPOs is 25% from retail, 25% from HNI, 25% from non-institutional, and the rest from the institutional investors. Now, this is not a hard and fast percentage allocation, but more or less it will follow along these numbers. Now, here's a very interesting stat that I want to show to you. I mentioned that NCD IPOs are a route through which corporates raise money in the form of debt to fund their business operations. And this is one of the most popular routes that corporates have been using to raise their money beyond taking debt from banks. So what has been typically the number of issuances of NCDs that has happened in the past 3 years, and what has been the volume of money that has been raised through these NCDs? Let's have a quick look at those statistics. In the year 2019-20, there were around 34 NCDs IPOs of rated listed NCDs which got issued. Then COVID hit 2020-21. Majority of the businesses were running at a very low level. So there were less number of NCD IPOs. The count was around 18. And 2020, 21, 22, once again, when the market opened up, corporates started raising money via NCD IPOs. And as you can see, the count then increased to around 28. The money in crores that was raised in these past 3 years through NCD IPOs were, in 2019-20, corporates raised around 15,000 crores through this route. 2020-21, it came down to around 10,600-ish crores. And 2021-22, once again, it has increased to around 11,600 crores. So as you can see, this is one of the dominant avenues through which corporates, institutions raise money to fund their businesses. And the numbers are gradually rising year over year. Now, a natural question that comes to the mind of a lot of us is that we see a lot of equity IPOs happening, and in the recent past, we had some very blockbuster IPOs, which equity IPOs, which caught a lot of attention, and there was a lot of press coverage like that of Zomato, Paytm, Nykaa, and other companies also. So as an investor, it becomes very important to understand what is the difference between an NCD IPO versus an equity IPO, because with this information, I will be able to decide where to invest. Let's try and decode these two terminologies and see the differences between them. NCD IPO is a route through which a corporate borrows money in the form of debt from investors. Equity IPO is also a route through which the company raises money, but in exchange of this, it is not a borrowing that it is taking. It is actually selling a small portion of the company by issuing shares to the investor. So there is a stark difference. So here in NCD IPO, the investor is the lender, and in equity IPO, the investor becomes the shareholder in the company. Now, when I apply an NCD IPO, the allotment happens on a first come, first serve basis. For equity IPO, there are two conditions. If there is an undersubscription of the total amount of money that the corporate is trying to raise, then all applicants will get their allotment. However, if there is an oversubscription, then there is a computerized process through which allotment happens. Ownership. In NCD IPO, investors do not have any ownership in the company. They are just lenders of money, and they will be getting interest from the company in return. In the case of equity, the investors become partial owners in the company because they own shares of the company in return. The cost of raising money through the NCD IPOs is lower when you do the math, and vis-a-vis this, the cost of raising money through equity is higher. This is also one of the reasons why you will see companies raise money through the equity IPO route barely once or maybe one or two times in their lifetime. Whereas they repeatedly can raise money via debt through the NCD IPO route. Because NCDs are fixed income instruments, so they give investors fixed returns, which is upfront told to the investor when they're applying for the IPOs. In the case of equity IPOs, of course, there is no returns. It is owning the equity of the company. So based upon the company performance, the returns are going to be commensurate with that. The risk associated with NCD IPO is pretty much on the lower side, provided we are investing in good quality NCD IPOs which are rated, listed. In the case of equity IPO, the risk is high because I am owning a part of the company, right? So if the company does well, I'll get high returns. If the company does not earn well, I can make a loss. So the whole paradigm of investment of capital in both the cases are very different. Tenure. NCD IPOs always come with a fixed tenure till which they will last, after which the company returns back the money to the investors and the NCDs cease to exist or they mature off. For equities, we have to sell it into the market to make to actually stop owning the shares or to make a return out of it. There is no fixed tenure over here. And finally, liquidation. NCD IPOs can be sold off in the secondary market before before the debentures mature. Whereas for equity, investors have to always sell it, in the secondary market. So this, in brief, is the difference between the NCD IPO route and the equity IPO route. With that, let's now move on to the next poll of the day. And here is the question. The question is, if you have to invest rupees 10,000, then where would you invest? Option 1 is listed and rated NCD IPO with 9.5% return. Unlisted and unrated or very low rated NCDs issues which give around 11% returns. Or I don't invest in either of the above. I will invest somewhere else. 10 more seconds to answer. And I will end the poll over here. Let me share the results. So the results are 86% of us have mentioned that we'll be investing in listed and rated NCD IPOs. Around 7% have mentioned that we will take a shot at unlisted, unrated, low-rated NCD issuance. And around 7% once again have said that we will be investing in other opportunities. So we can understand that our audience today do understand the difference between investing in rated listed debentures versus unrated, unlisted, or unlisted low rated debentures. Now, with this understanding, let's now try and understand what is the back-end process that the companies follow to raise money through these NCD IPOs. This will give us clarity on who are the various entities who are involved in this entire process, assisting the company in raising the capital, and in what all capacities. First, when a company decides to raise money, it actually drafts documents which state how much money it wants to raise, what is the amount of interest that it is going to pay, what is the allocation that it's looking at those 4 categories of investors, which is retail, HNI, non-institutional, and institutional. What will the money be used for? How is the company performance in the previous years? All those details it puts into documents and submits with the registrar of the company. The registrar of the company then gives it the permission that yes, you may go ahead and start your NCD IPO process from so and so date to so and so date. Typically 20 days is the duration, right, wherein investors can apply for the NCD IPOs. Along with that, the company also appoints an entity called as a registrar. Now, the registrar is basically the bookkeeping entity for this entire NCD IPO issuance process. The registrar tracks who all have applied with how much amount of money, ensures allotment is done on a timely basis, and post that payments are done to the investors on a timely basis. The third entity is a trustee. The trustee oversees the overall raise of the funds, the deployment of the funds, and then the interest that is being paid to the individual investors. In short, the trustee is the entity along with the registrar who works to protect the investor interests. So if investors face any problem during the NCD application process or post that, they can always write to the trustee and the registrar for that particular IPO. The company also has to obtain a credit rating for the NCDs that it is going to launch through the IPO route. The credit ratings are typically given by credit rating companies like CRISIL, CARE, ICRA. And finally, a company that is looking to raise money via this form of debt, it will not go out on its own to the market and invite investors to start applying for its IPO. It will actually partner with a few financial institutions who specialize in reaching out to investors, be it retail, institutional HNIs, to raise the capital for the company. And they are termed as the fundraising partners. So that's like the whole process. Now, when this has been set up, then the company opens up the NCD IPO application window through which investors of various categories can apply. And then there is a close date after which allotment is done to the investors for the NCDs, which is credited to their demat account. Now let's come to the central part of this whole discussion, and that is having understood that what is an NCD IPO, why companies raise money through the NCD IPO, difference between NCD IPO and equity IPO, and what is the backend process or work that goes before the NCD IPO window opens. Having understood that, let's now understand what is a way to invest in them. It's a very simple process to invest in NCD IPO in current times. Uh, the financial systems have been set up in a very smooth and efficient ways to enable retail investors to smoothly apply in them using UPI. So the first thing that you can do is you can visit Golden Pie. We continuously run NCD IPO windows from time to time based upon the issuances that come into the market. After visiting the platform, you can select the issuer of your choice, whose NCD you want to invest into. Then you have to enter your information, which is mail ID and phone number, because these are the two reach out points through which you will be getting information about your application, allotment, cancellation, if any, all those details. Third, you have to enter your PAN number and DMAT number. This is the DMAT account where on successful allotment, the NCDs will be credited and you will be held over there till maturity. And the payment has to be done through the UPI route. You have to use your UPI handle to make the payment. And typically UPI mandate comes to your UPI app, which you have to select, which you have to approve within 48 hours of receiving the mandate. Once the IPO window closes, then the funds are deducted from the investor's bank account and equivalent number of debenture units are credited to the demat account of the investor. So that's overall the online NCD process. And like I mentioned before, it's a great opportunity for first-time investors to participate in debt market for fixed returns and earn returns which are higher, way higher than that of bank FDs. And the ticket size starts from 10,000 and it goes to a maximum of 10 lakhs. Now, since the payment is through the UPI route, so as per the latest norms, one UPI payment will allow up to a maximum of 5 lakh. So if you're looking to invest more than 5 lakh, you have to break your application into break your whole funds into two parts, 5 lakh and anything beyond that one. So to keep in mind are two prerequisites. One, I should be having an active demat account where I will hold, where I'll be holding the NCDs, and I have to have a valid UPI ID to pay. There is also an offline process for investors, especially investors who are looking to invest beyond 10 lakhs. It's also a fairly simple process. You can visit the platform once again, select the issuer, then you can download the form from the platform. An email is sent to your registered email address, wherein you will have a form to fill up and a sample form which is filled up already. You can go through that and fill up the equivalent details in your application form, sign and courier it to the Golden Pies address. On receipt of this, it is bid on the exchange, and post bidding, the funds get blocked into your bank account. And then finally, once the NCD IPO window closes, the funds are deducted from the bank account, and allotment of the requisite number of NCDs are done to the corresponding demat account that you have mentioned in your form. So these are the two ways of applying for the NCD IPOs. Now I'll do a quick demo on the platform to show you the step-by-step process of how the online process works for the investment. So this is the Golden Pie platform. I have signed up and I have logged in. In the second part, I see there's a section for IPOs. See latest bond IPOs. If I click here, I'm able to come onto the IPO landing page. See bond IPOs. When I do this, I can see there's this Ugro Capital which is running, and then there's this India Bulls Housing Finance which is running, right? Now let's say I want to apply over here. Let me quickly show you the application process. When I do an apply now, I'm taken to this portion. Here is a link which says download prospectus. This is basically the document which has all the details around this specific IPO. How much money is being raised, for what will it be spent, what are the various interest rates that will be offered, right? What is the company, financials, all those details are over here in this prospectus. So investors are definitely urged to read these documents properly before investing. Now then I'll draw your attention to two parts over here. Category 4. This category refers to retail investors, and like I mentioned, minimum amount of investment is 10,000 and I can invest max up to 10 lakhs. There's this other category which is for HNIs, wherein if I'm investing more than 10 lakhs, I'll be falling in this category. Here you can see a couple of terms termed as a series. Now, it's important to understand what a series is like. A series, as you can see, actually is an NCD, a debenture over here, which has a payment term, that is how frequent it is going to pay. It can pay yearly or monthly or on a cumulative basis. It is going to have a certain returns, which is termed as a yield. And there's going to be a certain tenure, that is the time till which these NCDs will be there in my demat account, and I'll be receiving the interest, after which it will cease to exist, and the corporate will return back the funds to me. So I click on this series 6, right? It will now show me all the details about this particular series. It will show the cash flow also for 10,000 investment, how much it will be on this side. I can see all the details before I invest. So I go back over here. And let's say I want to invest, say 5 lakh rupees. Now, point to be kept in mind over here is that the face value of every single NCD is a standard 1,000 rupees. And the minimum amount that I have to invest is 10,000, which means I have to buy 10 units minimum, right? Now, if I have to invest 5 lakhs, then I have to invest in 500 units. As you can see, it has become 5 lakh over here. Next is my details, which is my name, email ID and mobile number where all communication for my application will be sent. I do a continue. Next section is entering the PAN number and the DMAT details. Now, my DMAT can be held either with NSDL or CDSL. Where do I find this detail? I will essentially find it in the profile section of my broking account. So let's say I have an account with Zerodha. I'll go to the profile section. I'll be able to see my DMAT details. The DMAT number is essentially a 16-digit number, wherein if the DMAT is with NSDL, it will start with IN, and if it is with CDSL, it will be all numbers. Apart from that, I can also get my DMAT number from my ECAS statement, which is sent regularly to my mail address. You can read over here in case you have a confusion around where to find the DPID client ID, which is basically the DMAT details. Payment. The payment is compulsory through online, through the UPI route. So here my HDFC UPI handle is used. I can see the various UPI handles which are supported in this NCD IPO. Typically, almost all popular UPI handles are supported by the NCD IPOs. ICICI Bank, Kotak Mahindra Bank, Paytm, PhonePe, right? All the popular ones. Bheem app, all are available as support. Now I do an apply IPO. When I do this, I finally have applied it. Now what happens behind is that this application, my application now goes finally via the exchange to my bank with which, the UPI handle is attached. That bank then sends me a UPI mandate on my app, which I have to accept within 48 hours of receiving it. And I can then, go to my orders and I'll see that I have applied for this. The DP status, it will become verified once exchange verifies my details. And payment status also becomes funds blocked successfully once I have accepted the UPI mandate. So that in brief is the way of applying through the online route for NCD IPOs. We will return back to our deck. Now, couple of things to consider while investing, things that we should be aware of before we make the investment. First, we should know what are the details of any NCD IPO before we invest in them. And where do we get that? We get that these details in the information memorandum or the prospectus of the NCD IPO, wherein it is mentioned total what amount is being raised, what percentage interest will be paid to investors, who is the registrar, who is a trustee, who are the fundraising partners, what is the company into, all those details are there. Investors should read about it quickly before investing. Second, we saw that this concept of CDs, the entire amount of money that is being raised through the NCD IPO need not be paying the same rate of interest and maturing at the same time. Different portions of these series will have different maturity, different yielding percentage, and different payment frequencies. The payment frequency can be monthly, quarterly, biannually, cumulative. All those options are present. So before investing, see which is the one which is suitable for you. How frequently do you need the payments, and how long are you willing to hold these NCDs? Accordingly, you can pick up the series. Base size, green shoe size. This is an important term. It simply means if a company is looking to raise, say, 100 crores and it's opened the window, and then there's so much amount of over application that total amount of application that came in amounts to 500 crores, right? This 100 crores is termed as a base option, and green shoe option is the amount up to which maximum the company can retain in case of over subscription or over allotment, right? In our example, 100 crores would become the base option. And let's say the company has a green shoe option of, say, 300 crores. So up to 400 crores is the total amount the company can keep back. And any amount beyond that, they will be, the funds, if they are blocked, they will get released. And investors will not get allotment for the amount beyond 400 crores. Secured versus unsecured NCDs. This is also an important parameter based upon my investment type. I have to select whether I want to apply in secured NCD IPOs or unsecured NCD IPOs. Point to be noted over here is that secured NCD IPOs typically will pay slightly lesser than unsecured NCD IPOs. Senior versus subordinate NCDs. Here also, senior NCDs will pay slightly lower than subordinate NCDs. And finally, please note that credit rating is not the only measure of safety for any NCD IPO or bonds in general, right? One has to look into what that company is doing. How has it been its financials, at least for the past 3 or 5 years, whether they're improving, whether they're going down, right? What is the management quality over there, right? Have a holistic knowledge and then take a decision to invest. And this is the last point that we'll be covering, after which we'll move on to the last poll and then Q&A session. So here are some of the most popular questions that get asked during NCD IPOs. So these questions are ranked as per the frequency. So the first question is KYC required for NCD IPO application? The straight and simple answer is no. When you apply to the NCD IPO, you are giving in a couple of information: your name, your PAN details, your UPI handle, and your DMAT details. These details actually are examined by the exchange to verify that this is the right person who is applying for it. So no new documentation is required for KYC for NCD IPOs, thus making application over here very simple and straightforward. Second question: what is the minimum to the maximum amount that retail investors can invest? So, like I mentioned, the lowest amount with which that with investors can apply is 10,000, and it goes to up to maximum 10 lakhs. Now, when you're paying through UPI, the maximum amount that you can pay per application is 5 lakh. So if you're paying beyond, if you want to invest beyond 5 lakhs, you have to split it across 2 applications. Second point: how to accept the UPI mandate? Typically what happens is, once you have applied, right, through the platform, it goes through the exchange and finally to your bank account. The banks verify your details, and then they actually send the mandate to your UPI app, where you have to accept it. Typically the time for which the mandate remains live is 48 hours from the time you have received it. There will be mailers that you'll be receiving on your registered email ID, which will tell you that your bank has probably sent over the UPI mandate to you once it has verified your details. There are certain cases wherein investors can cancel the application, or maybe for some reason the funds got blocked and they are not getting released. Then when will the release of the funds happen? That typically happens post closure of the IPO window. And the final question is, when will I get the NCD allotment? So that typically happens within 7 to 10 days post closure of the NCD IPO window. So these are a couple of questions which has got asked maximum number of times, and these are the responses to them. With that, now let's move on to the last poll of the day. If you have to invest 50,000 in fixed income products, which of these would you invest in? Option 1, sovereign gold bonds with 2.5% annual returns plus capital gains in case gold value appreciates. Corporate fixed deposits like Bajaj Finance FD or Mahindra & Mahindra, Shriram Transport, so on and so forth, which can pay around 8.5% per annum. Rated, listed, secured NCD IPOs with returns of around 9.5%. And government securities, bonds issued by the central government via RBI, which can yield up to 7.5% annually. And last option is, I am really not interested in any of the above fixed income securities or fixed income options. There's no right or wrong answer over here. It's just your view of where you would want to invest. And you would have certain rationale why you want to invest over there. Time's up. I'm going to end the poll and I'm going to tell you the results. Around 72% of us in the audience today have mentioned that they would be considering rated listed secured NCDs to invest in. Next, after that, are investors who have said they would invest in corporate fixed deposits. Then we have got investors who have said they would prefer government securities yielding around 7.5%. A 4% have mentioned that they would invest in sovereign gold bonds. And then the last 3%, they have mentioned that they are not interested in any of the above. So with that, we come to the end of this webinar. Now I will take up the questions and try to answer them one by one. All right. So here's the first question. This is from Dr. Piyush, and his question is, let us know about the taxation on income earned through NCD, bonds, etc. So when I invest in NCD, I will be earning interest into my bank account. That one will get taxed as per my income tax slab. Apart from that, if I sell off the NCDs before maturity and I make capital gains on them, then there will be capital gains taxation, which I'll be liable to pay. If I'm doing the sell off before 12 months, then there will be short-term capital gains taxation, which is once again at my tax slab. And if I am selling it off beyond 12 months, it is LTCG or long-term capital gains taxation, which is just 10% without indexation. That's the first question. The second question is also from Dr. Piyush, and he has asked, also let us know whether the returns promised includes Golden Pie's commission. So here's the point, the Golden Pie is an online platform for making investments. There is no payment by the investors to be done to Golden Pie on this. Whatever are the returns that are promised by the bond issuer, which is the company, right? That is exactly what you're going to get, right? There is no concept of a commission over here for Golden Pie on this. Your question might be, then how does Golden Pie get paid? Well, the issuer, based upon the volume of investment that happens, right, through the platform, pays a kind of a fee to Golden Pie for the service. Let's now consider the next question. The question is from Mr. Ramchandran Nandailath, and his question is, how to apply for public sector bank bonds and PSU bonds? Well, public PSU units come up with that NCD IPOs from time to time. There is one from, I think, National Highway Infrastructure Trust, which is to hit the market very soon, either towards the end of this month or towards the beginning of the next month. I mean, they are in the process right now. When such NCD IPOs windows open up, you can always apply with the requisite amount of funds that you want to invest in. Apart from that, there is a secondary market of bonds and debentures where the public sector bank bonds and PSU bonds are always readily available. You can look up the platform and or connect with your brokers and you can invest in them. The next question is there the question is from Mr. Amol, and his question is there a convertible debenture that can be converted to equity? Yes, certainly. Companies certain times raise money through convertible debentures, and which gets converted to the share of the company on a predefined date in the future and on a certain the share price of the company at that point. So I mean, as a matter of fact, Reliance in its early days has used this extensively, this route, to raise funds in the form of convertible debentures, just as an interesting point from historical perspective. The next question is from Divyadhar, and the question is, any chances of AAA rated bonds goes by default? Yes, there can be chances that AAA rated bonds have gone to default, right? That is why it is very important not to just judge or gauge the safety of a bond or an issuer just by looking at the credit rating. You should look at the company financials, the company management quality, any good or bad news about it, and then invest. We'll move on to the next question. This is from an anonymous attendee, and the question is, what is subordinate? I did explain it during this webinar, but I'll re-explain it once again. So a senior bond or a subordinate bond, right? This is a sort of a feature built into the bond, and the significance of this is when the company reaches, let's say, the worst case scenario that it is winding up, then who will be paid first and who will be paid next? That's when this particular feature comes into picture. Senior bondholders will be paid first, and then whatever capital is there, subordinate bondholders will be paid. I hope that answers the question. We'll move on to the next question. The next question is from another anonymous attendee, and the question is, what is coupon rate and YTM? So this goes back to the basics of bonds. To answer this question, coupon rate is the fixed returns percentage that the company promises to pay the bondholder on the bond face value. YTM is basically the effective returns that one will be gaining once he or she has purchased the bonds, either at a premium or at a par value or at a discounted value. So YTM will be more than coupon if I have purchased at a discounted value. YTM and coupon will be same if I have purchased the bond at the face value itself. And YTM is going to be lesser than coupon if I have purchased the bond from the secondary market at a premium price. The next question is from Mr. Uday Bhanu, and there's a question that he has asked. He says that my Shrey NCD, an NCD issued by a company, has got stuck for 2 years since the company is under liquidation. Who will get the money first, bondholders or NCD after resolution, which is more safe? So firstly, it is the debt holders who are going to get money. Now, amongst the debt holders, it's the NCD holders who will be the first ones to get money post resolution, which will be taken by the NCLT, right? Now, bonds and NCDs are interchangeable terms over here. Essentially, corporates can issue NCDs. They typically cannot issue bonds. Bonds are theoretically speaking issued by public institutions or the government. They are fully collateralized and they come with a high level of safety and other measures which are there. For NCDs also, there can be high level of safety, and asset which is backing them. It just depends upon what kind of NCD or whose NCD I'm investing into. So once again, I emphasize the same point that just do not go by the credit rating of a company or by knowing that the company is there in the public domain, lot of advertisements. It is essential to just dive a little bit deeper into the company financials, look at the company management, and see any good or bad news which is there, which will help us in investing in the right set of bonds. The next question is from Mr. Kishore Singh. He has asked 3 questions. Number 1, where can we check if the bonds are listed or on NSE and BSE? So bonds typically come with an ISIN code. So it will be ISIN and then INE, and then will be certain numbers, right? Which is a unique identifier for the bond. Now, you can actually go to BSE or NSE and you can check over there whether the bond is listed or not. On the Golden Pie platform also, there's a section which clearly mentions whether it is listed or unlisted bond. The second question is, which rating is best, CRISIL or ICRA? Well, both are very good credit rating companies. It's very difficult to say which one is better of the two. Both are pretty, reliable. institutions. The third question is, which is the least rating do we look for investing in bond? A, see, as per uh, the government of India publications, there are two kinds of credit rated bonds: investment grade bonds, which starts from sovereign, which is like government securities. They don't need any rating because it is understood government will not default. Similarly, state government bonds, which is also understood that they will not default, so they don't have any credit rating. They are regarded as sovereign. Then it is AAA, AA, and then triple B. This is where the investment grade bonds category stops. Any bonds rated beyond this, lower than this, are termed as junk grade bonds, and they it could be very dangerous. But once again, I will emphasize, just don't go by credit rating. Please look at the company details as well. There are large number of questions from various investors, but we are running out of time. So probably I'll take two or three more questions, and then we will close off this session for lack of time. But we will definitely reply back to you with with answers to your questions, right? Post the session. Um, the next question is from Mr. Vinod, and he has asked, is it possible to invest NRIs in NCDs? I mean, whether NRIs can invest in NCDs? Unfortunately, no. As per the current regulations, NRIs cannot invest in NCDs. There's a similar question from Mr. Subramaniam also. NRIs cannot invest in NCDs, and you will see that very clearly written in the prospectus of the NCD IPOs. However, once they become available in the secondary market for buy and sell, then NRIs definitely can invest in these NCDs, provided that these NCDs are NRI eligible. So this parameter will be clearly written in the prospectus that NRIs can invest in these NCDs once it is available in the secondary market, not in the primary market or the NCD IPOs. Next, we have the question from Mr. Rakesh Pandey, and his question is, are NCD interests offered by corporates impacted by bank FD interest rates? Well, certainly. Bank FD interest rates in turn are actually dependent upon the repo rate, which is set by RBI. So when RBI increases the repo rate, the NCDs, fresh NCD that comes to the market, right, they will also offer higher returns. And if RBI is actually bringing down the repo rate, right, then companies can afford to raise money through NCDs by offering lower rate of interest. I just didn't mention about bank FDs because bank FDs are a derivative of the RBI's repo rate itself. RBI increases its repo rates. Banks are supposed to increase their FD rates. When RBI brings it down, similarly, banks are supposed to bring down the repo rates. The next question is from Mr. Amol, and his question is, which is safer, higher rated, unsecured, subordinate? Not sure, like, I mean, which is safer as in whether it's higher rated bonds or it's like unsecured subordinate bonds. But I'll try to answer it, from safety perspective. Yes, rating is one of the criteria of understanding the safety. But yes, senior secured bonds would be safer than unsecured subordinate bonds. And so commensurate will be the returns, because senior secured bonds will have higher level of safety. They will give you lesser returns than unsecured subordinate bonds, which will offer higher returns because there is more risk involved over there. And I'll take the last question for the day. It's from Mr. Surya Kumar, and his question is, I'm planning to enter in bond market. I wanted to start small amount to understand. My question is difference between India Bulls NCD IPO and Ugro NCD IPO. That's a great question, actually. Trying to understand first, what is this NCD? Who is this issuer? What is the safety built into it? And then take a call. So, To understand the difference between these two issuers, one is you will have to look at what is a credit rating, right? What is the various series that each of these issuances have? What is the rate of interest that they are offering, right? And apart from that, you should definitely look at India Bulls as an entity. How is their business running? And Ugro as an entity, how is their business running? Only then we will be able to make a holistic idea around these two entities and the NCDs that they're issuing. So that's all for the day. I will take leave now. Thank you everybody for taking out your time and hearing patiently through this discussion. I hope I have been able to share some information of value to you. Until next time, see you.